Hey everybody, this is Patrick Zielbauer from Infinity. Thanks for taking a look at the YouTube channel here. I just want to go through the last couple of days of the signals on the system we've been following, tracking here. Keep in mind these are simulated trades, it's hypothetical data. This has limitations, so be aware of that, keep that in mind. On Wednesday morning, early, around 5 o'clock, I was watching this market rally a little bit, and you can see the CCI down here breaches above 200, the value area gets breached up there. That's a short signal. So the market's been bouncing around a little bit in the morning. Normally I would wait until about 6 o'clock, but I was not hesitant really at all because we've seen these little ranges in the early morning, and typically those big moves haven't really happened until after the open. So didn't have a problem going short there. So that signal comes through, and that leaves us short of NASDAQ. So a little bit later, if you look over at the S&P, there's a short signal on the S&P right around here. This is about 6:40 or so Central Time. Now, because the market has had a tendency to run a little bit, I've been a little bit more hesitant to do two of these at the same time because I'm trying to keep these potential, losses to be reasonable. And of course, again, it's hypothetical, but I'm trying to design this around real people, not people with unlimited money. And so that signal comes through, and I decided to take it. So that's leaving us short in S&P and short in NASDAQ. So then what happens is the market rallies a little bit. Now look over here, like this kind of looks scary with the NASDAQ, but keep in mind the NASDAQ is only $20 a point. So this level here around 56.74 all the way up to 56.80 or above the high here, this is not a lot of money, right? $20 a point, we're only 5 points higher here. So this is not intimidating at all, even historically. It looks worse than it is. So you're short that market. The market rallies a little bit, it's gyrating a little bit, so there's a little bit of an open trade loss here, but then as you see, the NASDAQ, being the weird one on the bunch lately, starts to break. So the NASDAQ breaks. And at that point, what I had decided was, I decided to cover the S&P because I saw a long signal come in the NASDAQ. So the NASDAQ actually fell so far that it came and breached the value area low, generated a long signal, which I did not take, and kept going. But because it generated a long, I flattened the S&P. So the S&P ended up being flat for a small loss, 1.25. And I did that just so that we had less exposure. And just in case the market did snap back, I didn't want to be short to when it had given us this. So now at this point, you're only short one NASDAQ, the market comes down. At some point here, I decided to cover it, and the covering happened right around 56.62 and a half, right at this area in, let's see, where is it? This bar right here. So this is where, I don't know if it was, I think I put a stop in and the market rallied back and stopped me out. So that's a decent one. If you look at the trade activity log here, so here's the small loser on the S&P, and then the NASDAQ is a $230 winner. So that's not a very productive day, but it all happened pretty quickly, and it was over early in the morning. So that's that. All right, now let's go to yesterday. So yesterday was a little bit scarier. And I'm gonna go through the trade activity log again because I want everybody to see what you're up against here, but here's basically what we see. There was nothing in the Dow, so the middle chart I'm kind of ignoring right now. Let's go forward. Okay, so here's what happened in the NASDAQ. So in the NASDAQ, if we look at this time right here, this is right around the open, there's a long. Remember what happened at the open yesterday? The market starts ripping lower. So again, this type of system, one thing I have said over the course of following this is that if you're going to trade a reversion to the mean strategy, you can't be scared to be in an open loser for a while. And there might be times where you want to go for it and add to a position, but you've got to have a pain, an uncle point. One thing that I have tried to do, and we can go back to the trade activity log to see this, you will see situations where I've taken significant losers. And the idea is that to keep it from happening too often, but you'll see some that are sizable. This was the worst streak. This is when the market really started to go into this trending mode, and I wasn't prepared for it. And the system kind of got rolled over a little bit. So every now and then you're going to see bigger numbers like this. Well, this could have been one of those days, but it wasn't. The market breaks down. This is a 10-point loser at one point. So that's a $500 risk on a one lot. That's significant, for most S&P traders. But I never added to it, so I stuck with it. And the market ends up coming back, as you see. And the key is here, with the S&P, it's only a 3-point winner. This is a terrible risk reward ratio. This is not, this is one of those things where we have the benefit of hindsight now. Ideally, I should have never taken this, but the signal came and I decided to do it. On the NASDAQ side, the NASDAQ, because it's only a $5 tick, and I love the fact that you can risk 10 full points, and the NASDAQ can only risk $200 on a 1 contract trade. You could put in a 20-point stop and only lose $400 on the NASDAQ. That's great. That's 80 ticks. It's awesome that you can do that. So with this one, the first signal comes in, bought one, a second signal came in, and this was a rare occasion where I say, okay, put another one on. And if you keep this position, at one point you are in an open trade negative of over $900. So again, this is about the uncle point. I can't say for certain if this were a live account if I would have stuck with it. All right, this is the reality. That would have been about the point where I'd say, okay, I've had enough. I think that if you're going to trade a strategy like this, again, you've got to be willing to take a hit every now and then. You just can't take a hit that's irrecoverable, not recoverable mathematically, where you have to add, 100% of your account balance back to your account via bank wire just to get back to even. So in this case, in my opinion, you're going to trade something like this. There's going to be times where you have to be okay with risking, $1,000 or more. So, if that's not for you, it is what it is. You could try to avoid, trades like this some other way or use a tighter stop, but you're going to miss out on some of the runners too, and this is a good example. So when the market punches that low end down here, it repeatedly hit it. And I remember seeing these candles down here and seeing, rejection. This is why I was confident that this market was going to come back. And it kind of reminds me of some of the stuff I learned from Dan Gramza. You guys might remember Dan. He's works for the CME. He is one of the best explainers of candlesticks. One of the first guys I did a live trading event with in Vegas when I was just out of college, where he was calling all the trades and I was clicking the mouse. It was the good old days. Well, he had taught. I learned a lot from him about candlesticks, particularly how to define rejection. And this to me looked like rejection, so I decided to stick with it. And the key thing here is to just not take yourself out too early when you start to see that recovery. I got really nervous around here as well, but again, the market started to break, rejection. Market started to break, rejection. Market started to break, rejection. And that's why I was confident that this was just a pullback on what turned out to be a longer term trend into the end of the day. So this is, this is a little bit, again, easier to speak about with the benefit of hindsight, a lot easier to speak about with the benefit of hindsight. But I think that this is the kind of thing you're going to see from time to time if you trade a reversion to the mean strategy. Okay, no one said it was going to be easy. And if you stuck with it, at the end of the day, I took both of these off. And again, it's a significant, winner. So if you look at trade activity log here, these are the final, this was the end of the day. So here's the S&P from the left-hand chart, and then these are the two NASDAQ trades. So it was decent. And again, sometimes these charts kind of look intimidating, but again, because it's the NASDAQ, remember, there can be big dramatic moves that don't associate themselves with huge dollar amounts. So don't be too scared just because you see a big break like this. It's not that much money, especially if you're keeping your position size reasonable, versus your account size. So again, hypothetical data. So, I think I disclaimed that properly, but very interesting stuff. And to me, a good example of how this will work from time to time, and got to be able to catch a couple of these every now and then in order to justify the losses. That's my opinion. So I hope it helps. Let me know if you have any questions. If you want a copy of the file, if you don't already have it, let us know. We certainly look forward to helping you out. Thanks. Have a nice weekend.